Good morning, good afternoon, and thank you for joining. Today's webinar is focused on closing deals in a virtual world, a topic close to all of our hearts. Amid continued uncertainty caused by COVID-19, the M&A landscape is in a state of flux, and with much of the global economy paused, it's no longer business as usual for deal makers. Key concerns include access to financing as credit markets tighten, valuation issues, getting creative with deal structuring, and even uncertainty over the long-term sustainability of certain business models. And against this backdrop, deal teams are working in a constantly evolving deal environment. Today, we'll explore some of the key themes. My name is Tom Allen, Head of M&A and Corporate Development at Midaxo. Today, I'm joined by Sami Miettinen, Partner at Translink Corporate Finance.
Hello, everybody from Helsinki.
A quick bit of housekeeping then before we begin. We'll be keeping your microphones on mute across the webinar. If you have any questions, please post these in the Q&A window and not the chat window. To access the Q&A window, if you hover over the bottom of the Zoom panel, you will see a small Q&A icon. Now, we're always interested to hear any suggestions for future webinar topics, so please feel free to post these in the Q&A panel if you have any suggestions. And we will be sending out an email with a recording of the webinar once we're done. In terms of the agenda, here's what we'll cover today. So how M&A teams can adapt to a new way of working, where the challenges lie and how to overcome them, incorporating uncertainty into deal structures, tips for closing deals virtually based on some recent cases from Translink, and why it doesn't make sense to return to normal. The presentation will run for about 30 to 40 minutes, and we will conclude the discussion with audience Q&A. And with that, I will hand over to Sami.
Thanks. So Translink Corporate Finance is a global chain of mid-market specialists. And here you can see our 4 areas of services. I would say, like in most investment banks, the sell-side M&A is our focus. And that's where we do most of our deals. Just to give a bit of a feel of our deal volume, because mid-market doesn't necessarily mean much. We did 34 deals in the Nordic countries, and here in Finland, we do something between 5 and 10 M&A deals per year. With COVID-19 times, it was looking a little bit like the pipelines would get stalled or cancelled. So over the last 2 months, we have done quite a bit of evaluation and financing advisory work as well to sort of get a bit of extra cost coverage. But now things look actually much better, and deals are closing, and we have managed to close a number of deals. So we are back to normal and not so much in the sort of crisis mode. We can talk about this, but we will mostly focus on the sell side and buy side deals and how they have changed over these 2 last months. Next slide, please. Okay, this is adaptation of the death of a salesman. And of course, times like this, people will come into the offices and say, well, hey, you just need to keep closing, always be closing, just use your leads. But it doesn't work like that anymore. Your old leads don't necessarily work, and you have to focus on the stuff that gets closed. And of course, the M&A landscape has changed quite a bit with the COVID-19, because it doesn't only affect what gets sold and bought, but then more importantly, how we do M&A in the first place, because everybody's at home and you can't sort of physically do the deal structuring and the negotiation way you used to do that. And but the good news, you'll get your coffee once you sort of learn to operate in this new world. Next slide, please. So what's happening in the sort of the pipeline? You can structure the worldview over 3 baskets. First, you have the internal thinking inside the company, strategy and targeting. And here we have the how much things have changed in the sort of COVID-19 world. The red is the things that stall the pipeline. So as you can see in the strategy and targeting, nothing much is that wrong. So a quarter of the deals is sort of being rethought. But what's really happening is here in the last two stages of the deal pipeline, you have a half of systems going on the red alert. So due diligence and transaction execution, that's a big bottleneck, and if of course gets transformed to the post-transaction integration, if you have any, because of course if you don't close deals, you never get the post-transaction integration. But even the stuff that's already got bought in the beginning of the year or end of last year, people will have a problem on the integration streams, and that's I think what the Midaxo system does well is you have a great handovers over these three areas. But we'll focus on these last two because those are the problem for closing. Let's move on to the next slide. Okay, this is me actually. I look exactly like that if you would have my video on. But this is what we started doing. Once we noticed we can't physically be in the same room with our clients, and then the other side, we started slotting massive amounts of Zoom and Teams meetings. And often you started having a team dynamic where you had lots of people on the line. Some were having screens open. Some of them were not having camera streams. Then you never quite knew who's focusing, who's doing work, even internally. And then we figured out that we need to be smart about this. So we use Slack a lot. Sometimes we use Teams chat functions, but it's most of the time Slack feels right for us and our clients. We start sort of coordinating the team streams internally and externally as well. Mostly the Slack spaces are organized so that at Translink we have our own channels, which the client, even our own client, don't see. But then we have another channel with the workspace with the client, our client, where we coordinate with them. So for example, if we're negotiating a deal, then we will be doing most of the talking as advisors, but then at times we instruct the client to sort of speak. And sometimes when the client speaks, we also give comments if we thought it went well. And we found this is actually surprisingly not being done by the other side. It seems to be a bit of an amateur show from their end. They don't sort of use this back channel coordination, and you can see that you have like the lead negotiator speaking without any coordination with their clients. People being much more passive than they usually would be in the sort of live situation, and that's an advantage for us if we know how to play this game, and that's why we are able to close deals and actually be in control even of the other side. Might sound a bit arrogant, but you should try this in your next meeting. Have a back channel. It can be WhatsApp if you don't have Slack. It can be the Teams or the internal chat channels you use normally. But I think that's by far, I think, the biggest finding of how deals get done, the back channel coordination and the teamwork in the negotiations. Next slide. By the way, I noticed there's a question why we use Slack and not Teams. I think it's just a personal taste. If you're already on the Teams screen, it sort of feels a bit wrong if you use the chat function there. And you're a little bit worried that you will actually type stuff to which gets broadcasted to the other side. So it's kind of good to have a separate application which is separate from Teams. So and to be honest, that's sort of like the feel of the Slack flowing. It's a bit more personal than Teams. Then we move on this. What's in the heart of the virtual deal? It's actually quite similar to what we in a small country like Finland did when we're doing international deal, cross-border deal. And there in the old world, we had this is a biggest company in Finland, Fortum, and we helped them on their domestic playbook. We sold them a small recycling business in Finland, and then our client who sold that business, they used the monies from Fortum to acquire a Baltic business. So it's sort of on the bottom of this domestic playbook. But then on the top, you have the international playbook, and this is a kind of my approximation of the virtual world for you guys especially in the USA. You do a lot of cross-border stuff, but then you also do interstate deals. And I think now that, because you can't travel that much with the planes, you have to sort of approach your sort of even domestic interstate deals a bit like the small countries in the rest of the world do their international deals. And there you have a kind of a funnel of opportunities, and you need to be smart on that. You screen for targets, you sign NDAs, you send indications and form the letters of intent and progress to the negotiation and DD and signing and closing. And you sort of do this in the virtual way. So all of these documentation and process streams need to be virtual. And then the paper is gone from the system. And a big part of this is now the ESG decision, whether you actually kill some of your streams, which you inherited from the pre-COVID-19 times. And you can, I think, in my opinion, view the COVID impacts a bit like ESG decisions used to be in the old world.
Sami, when it comes to M&A funnels, deal pipelines, do you feel now is a good time to reset acquisition criteria and deal objectives to account for the change the world is witnessing? Or do you feel perhaps the dust needs to settle a bit before M&A teams shift their focus and maybe make a knee-jerk reaction? Also, second part of my question, is there any advice that you can offer to any deal teams currently working on domestic deals, but considering building a pipeline of global targets and embarking on cross-border deals going forward?
Yeah, great question. I think the knee-jerk doesn't sound right, because if you do this smart, you can actually pick up the pieces of a deal which look like a mistake and then just make it a better deal. So you just need to have a good wisdom of how your value chain changed as a result of the COVID-19, and whether that change is permanent or you will have a sort of W-shaped recovery where you get the second wave of COVID-19 hitting later on, and or whether you sort of view this as a sort of a one-off effect. And to be honest, there are businesses which sort of don't have the second wave risk. We'll come to that question at the end of the presentation, like what is flying. But definitely, if you're sort of working on the information technology where your workforce is distributed, and it will be even more distributed in the future, then the COVID-19 is no loss for your business model. It's a synergy, and you can see that happening. But then, of course, if you on sort of workforce intensive business with lots of physical workplaces like restaurants and warehouses or assembly, and chains coming from affected countries, then you of course have to have a hard look whether the deal is worth doing in this new situation. Do you feel there's a pieces I missed out on this, Tom?
No, that's fantastic. No, thank you.
And was there a new question? Yeah, so next slide. So if the philosophy is that a virtual deal is a bit like a cross-border deal used to be, but more advanced and even less physical, you can have a look of what worked in the sort of best practices in the sort of old world and draw some conclusions from that. This is a deal we did with the American counterpart. This is Marron Bio Innovations, is a Nasdaq-listed US company, and we represented the Finnish technology owner, ProFarm, technologies, and they structured a deal with us under the US docs, where the company was acquired for $32 million. And this was already done in a way where we had to think carefully that we don't travel that much to New York to do heavy lifting negotiation with the Americans, because that's very costly. So we already sort of did the deal planning so that the big negotiations took place in London face to face, and then we went on to the remote negotiation mode. And that was actually a very good learning for the new world in the COVID. This was completed late last year, whilst the world was still open for travel. And if you look at then the next slide on the couple of items in the deal structuring, I think this works in the virtual world as well. You can split the deal executions and negotiation in two phases. It's a due diligence and transaction execution, and then the transaction structuring. And both are sort of planned in advance, but executed sequentially. So we worked on the SPA and due diligence, and we had to adjust to American standard documentation, and we used the US law firms there. But then like in the Midaxo and Merrill data site and the other virtual data rooms are pretty much standard practice. So we were able to structure most of this in a remote fashion and get it done. Then on the transaction structuring side, this is actually becoming more important because of the uncertainty. You do more of this kind of risk sharing structures. Here we had cash, shares, and earnout, and pretty much all of them were used to the big extent. So I think this is a great tool to do in these times, because you have to share the risk of getting the second wave of COVID-19. So you actually, in most cases, are actually adding value if you think carefully about the 2020 earnouts, and then perhaps using shares as a consideration instead of cash deals.
Thank you, Sami. A couple of questions on these points, I guess. So, when it comes to estimating synergies and identifying value creation levers, I think it's fair to say it's difficult at the best of times, given current uncertainty when evaluating acquisition targets with value creation and synergies in mind. If a buyer is, I suppose midstream with their deal when the COVID crisis hit, have you kind of had any experience of kind of how to kind of course correct and what to focus your attention on, to conclude the due diligence piece and identify those synergies?
Yeah, we have seen it kill deals outright, because it's just your business case went completely wrong, or your approval process just can't take that much deviation coming from a sort of a financial crisis type of volatility. And going both ways, we get this massive correction with the stock markets crashing 20-30%, and then rebounding on the back of very thin earnings and hope of recovery. So and you can have like a whipsaw effect on that. But then you can that's where the earnout comes in hand. So you sort of you could adjust your multiple probably downwards, because people see much more risk, so you have to adjust for that. But then take this year as a sort of a partial effect, and then perhaps you can push the sort of signing and closing until you see a bit of a recovery path on the basis how not just your potentially pretty horrible April earnings. But I think on the legal DD side, you can focus on the documentation, and perhaps I think the customer contracts is something you need to have a careful look, because the customers if you're acquiring business, they might be sort of wanting to renegotiate because of the change situation. and that could throw in spanners in your business plan. But then if you sort of have a highly synergistic deal on the table, then that will smooth some of the differences. So it's all has to be taken in the sort of holistic view. There's
Great,
a question.
thank you. Sorry, go ahead, Sami.
Yeah, there's a question on how does the acquirer evaluate cultural fit with the target in the virtual world when there is no person meetings and dinners? That's an excellent question. I think you're in the best position if you already formed the physical relationship before this new world. So you actually had done your dinners and meetings and trust building. So you can carry on with your mental map of actually meeting these people physically. But I think in this world, I very strongly use video streams myself. And I think that should be I actually would prefer to share my screen even now because it sort of gets more personal. And I think that definitely helps. You can build a part of that personal trust with just the video streams. And then of course, like the references and LinkedIn, they get much more important because people then can check with your network whether you are trustworthy as a person and as a firm. But a great question. I think those of us who have built extensive physical meeting networks and have been sociable, they are in an advantage in this new world. I think we can move on to the next slide. So there's a couple of pro tips from Finland, what we have found out. And if you split into the 3 categories, there's a workflow management, due diligence and transaction execution, and then the transaction approval. And I think here it comes a bit what the last question asked. The advisor coordination has to be done in a vacuum. So we have a virtual channels, and I think what seems to happen is that there's one advisor who kind of dominates much more than the previously. In the past, it was kind of a like a sharing of the workloads on the separate agendas, but at least us, we now carry much more the burden of coordinating things, and we are happy with that because then we can sort of have a good view on whether deals close and have a control on it. But then advisor to advisor contact needs to be also in the Teams and Zoom, and you can actually reduce the time. In the old times you had like these 3-hour meetings which were pretty inefficient, but now we can have like a quick 15-minute, 30-minute, 45-minute team sessions between advisors and the clients, and after the sort of important meetings we can have a quick recap calls of internally or advisor to advisor of 15 minutes. So we actually sometimes plan that then in advance. We have a 45-minute negotiation session, and then we slot in an internal 15-minute reflection session inside team on our side. And then the document sharing is getting more advanced. For example, this kind of document you see here is could be edited in real time, and then we have started to experiment with the sort of a live editing of documents, and that seems to work if you have a good typist in the team. Then on the due diligence and transaction execution, I think the agenda setting is hugely important. Now, I personally hate when people don't send the agenda with bullet points, and because now we start to get so efficient that the 45 minutes gets a lot of done if you just have a good agenda for it. And so I would use when you send your Slack and Zoom invites, just always put 3-4 bullet points in the sort of a top saying that this is what we'll cover, and then also follow them. And this breakup session happen in real time, like and then you need this Slack channel like Slack or Teams or even WhatsApp. So You don't need to adjourn to have a breakout. You just do that live on your back channel. And then, like I already said, it seems to be that the extroverts will win the game. So we can start seeing that the one set or even one person starts to sort of dominate the space in the deal teams, and it's good to be you if you can. Then on the last bracket, the transaction approvals, that's actually the legalistic category. So in Finland, there were lots of lawyers who said that, for example, the shareholder meetings, you will always need to have the option of having a physical meeting, and that's your right, that you can always demand physical meeting. But of course, now you can't, so things changed, and now we see a lot of AGMs even for listed companies and EGMs taking place purely virtually, and then they use trustees and proxies to sort of carry the votes. And then initially people just did the shareholder attendance records with Excel columns, but of course it would be better to use systems like Midaxo or Nasdaq Board Advantage or something like that to sort of record your minutes. And then the lawyers, I think, especially if you have a cross-border deals, it's a sort of a good idea to have one lawyer present in the virtual meeting taking notes. So you're taking especially if you have a financial distress risk present. So it's just good to sort of cover your back with that. And then the final point is that it's getting much more sort of a trust-based and collaborative, even sort of between the buy-side and sell-side advisors and the teams, and because you sort of have to trust the other party to execute and do what they promise to do. So you sort of lean on the other side of much more than you used to do, and you can't be so sort of adverse in these situations. Is there another question? No, I think we can move to the next slide. So then there was, I promised that I talk a little bit about what closes and what could close this year business-wise. So this is a study on the trends on the technology deals over the last 4 years. So the columns are previous years, and the last column is 2020, the trends, top trends for this year. And as you can see, the artificial intelligence and machine learning has been a very, very strong trend, and it's still on top. Then we had a cloud computing creeping in, SaaS business, and then a converged IT infrastructure. And we one of the deals we closed immediately after the COVID situation was especially in these two trends. So we helped the private equity owned MIS Group to acquire Euronic in the web hosting space, and of course that's very hot sector. So because of the web traffic, and then big data and the Internet of Things are very important, but a little bit phasing out from the top priority. And I think those are very important and could do a bit of a comeback, because you can't sort of send physical people doing remote maintenance, and it's much better if you do even this kind of work remotely and put the sensors in the machines, and they can be monitored remotely. So I think all of these trends will continue to be very strong. Then in the bottom of the slide, there's sort of a bubbling under trends coming from the COVID. We see health and telemedicine is a very, very strong area, of course, because you can't meet your doctor so easily and physically. And so this kind of a mobile tracking of your health will break, as will, of course, any form of digital remote communication, replacing the physical meetings. Cybersecurity, I mean, it's just massively booming, at least in the Nordic countries, because we're doing this kind of end-to-end point distributed work where everybody's at home with their laptop, and then suddenly your office via firewalls are useless. You have to build your cyber security end to end. And then, of course, the logistic and food supply chain. For example, we did another deal was we helped a media company to acquire a virtual shop. So it's because in the media space things are a little bit calmer, but then in the remote shopping, you have a massive boom. People want to buy stuff, but it gets delivered to your home. So those kind of trends are happening, and actually a lot of sectors are benefiting from this, and in particular the FAANG countries, the big five, Facebook, Amazon, Google, will benefit from these trends, and will take market share from the physical world. So it's kind of exciting times if you position your appetite right as an advisor or as a company.
Great, thank you, Sami. We've got quite a few questions having come in, but before we jump to the Q&A, there's just a few points you mentioned that I would like to pick up on. So firstly, I think it's fair to say that we can expect more deals where part of the purchase price is paid up front, with the balance of consideration being deferred and based on earnout mechanisms. But with COVID comes the risk of a rise in disputes over closed deals where earnouts is still being settled and disrupted. Additionally, I can foresee a situation where future earnout mechanisms could become horribly complicated. So I suppose my question for you is, do you have any tips for remaining pragmatic when it comes to structuring deals to account for future uncertainty?
Yeah, I think it's a sort of a both practical question, and I give my view on the sort of practical tips which seem to work, but then it's also legal question. For example, initially when the crisis broke in, we saw like a lot of legalistic approach, like people were looking in their term sheets or LOIs whether they had defined the material adverse change so correctly, and then actually we found that in most times the MAC clauses didn't get a challenge, so people sort of noticed that COVID-19 doesn't give you usually enough room to sort of break the deal on the M&A side at least, and then on the business side of things we sort of seen the even force majeure sometimes being used. But now that this is already priced in and in the market, then we just see people adjusting their deal structures to, for example, have a MAC clauses where you either explicitly keep the second wave of COVID-19 in as a MAC clause, or you explicitly leave it out, and I can actually share you example text of that just here. But obviously you should be pragmatic here, and so I just put it on the whole. Oh, this was too all. Let's put it to attendees as well.
Yeah, that's
so
great.
Here.
So I think if people check the chat panel in Zoom, you should see a body of text that Sami has pasted in. Yeah.
So this is a kind of a seller-friendly formulation, but then of course you can flip the end if you sort of want to have the MAC to include the second wave of COVID-19.
Fantastic, great. So I think we can move on to some more Q&A now then. So these are coming in no particular order, but Sami, to what extent have you seen sellers asking buyers to provide more robust assurances over the availability of funds for settlement of the purchase price?
Yeah, I think it's more of a buyer's world. So at least what I've seen, that if you can sort of keep your pre-COVID deal terms intact when you're the seller, unless you're in this kind of booming area where you have the new digital world trends really going for you, then you actually most of the time pretty happy you get the cash and the deal done. So, but so not really in those ends, but then we actually at Translink we use customer fund account, so we can sort of demand payment to there and then distribute it there and then take control of that stream as well. So just to sort of in Finland we are next to Russia, and like Lenin said, control trust is good, but control is better. So.
Great, thank you. A question with regards to the kind of sector focus that you mentioned. You've not listed FinTech. What is your opinion about FinTech when it comes to future deal making?
Yeah, I think like this electronic securities and then like the data rooms, and those are really breaking because you can't use the paper document so much to close. So definitely everything there booms, and I'm actually in the advisor board of a company which tries to sort of put on the on the blockchain the whole document chain. It's RealStocks.io. So of course you try to sort of virtualize the legalistic word and have smart contracts and the blockchain and on the execution side of things, perhaps also in the payments. So definitely it will boom in many areas.
Great, thank you. And on a kind of related note, are there any industries or sectors you feel are ripe for consolidation? And linking to that, who do you think the winners and losers will be of this current situation when it comes to sector focus?
Yeah, like you can see in the US stock market, the FANG companies are really going up, and even in the Nordics, I can see the telecommunication companies going up because of just the massive volume. So that kind of the obvious categories, the big virtualizers. But then, of course, the sort of innovative building service providers like WeWork and the sort of those who had a temporarily use of space, they kind of lose, and then fully distributed companies like Automatic, for example, is one example of a company which has only remote workforce, and they are big winners. Then work canteens are out because you don't go to work that much, and something like a Sky Chefs and Walt and are where you sort of do your distribution over the remote basis, that those are booming. So you have to sort of look on the both physical effects and then all the demand patterns.
Great, thank you. And then I think this next question touches upon a theme you introduced on an earlier slide. Do you have any suggestions for building scenario analysis into valuations given the current level of uncertainty? So I think maybe the question is suggesting it may be a bit of kind of sensitivity analysis and how you might apply that to a valuation. Yeah,
definitely. I mean, if you had your like a base case and optimistic case and pessimistic case, that's just not robust enough in these days. You have to have your COVID-19 scenarios for like a W recovery or second wave hitting hard, and then actually doing country by country check, like whether your sort of main logistic pieces are still intact if things happen. So I think you need to be much more specific on your scenario building than just the sort of sensitivizing on your EBITDA and revenues and a bit of a cost structure. So definitely scenarios are in and in a sort of a detailed way. And that's great news for us advisors, because then clients sort of need us to do that work for them.
Great. So every cloud has a silver lining, I guess. And then I think final question then to conclude on. So Sami, what have the past few months taught you about remote working. What have you found most effective or not? And how do you think Translink will work going forward, given what you've learned over the past few months?
Yeah, I mean the sort of a cross-border work ethic works, and then just slotting in these meetings and then doing then on the 45-minute rotation. That's just actually the biggest learning in my work, that you don't need anything over 1 hour in this new world, and you probably didn't need it in the old world as well. You just wasted a lot of time traveling from one meeting to another, and just having a Slack there, and then now you can do much more in your day than in the old times. Then just the sort of building rapport with your team, that's very important, and just have your like morning kickoff meetings, and be nice about them, and just share your jokes, and then when you do that on the international level, that's a bit hard, but you need to have the time for that, so you don't create islands of countries sort of we may be good spirits, but you sort of extend that to international events. For example, we had instead of actually of all places, we were supposed to have our biannual conference in Shanghai in China. And then, of course, that didn't quite work out. So we had to cancel that, but we had a great session of well over 100 people in Zoom, with everybody keeping the screens on, and just having a great time, and actually being relatively productive on that. So I just think it's a human level of work, and but using the tools you have, and actually I'm enjoying this work. And it's I find I'm actually much more efficient than I used to be, and that's how you get it done.
Fantastic, thank you. I said it was the last question, but we've had one more question come in at the last moment, and I think it is probably going to be of interest to quite a lot of listeners. So what percentage of earnout are you recommending at the moment in the current climate?
Yeah, if you are selling, you're not so optimistic about your future, then I think the percentage shouldn't be very high. But then you might not get the deal done. I think it's a bit hard question. I would say, let's say you operate in just a single valuation metric of, let's say, enterprise value over EBITDA. Then now we are on the 5th month of the year. You could just sort of do a backward-looking multiple and forward-looking multiple, and then just split them 50-50 in the sort of as a sort of a base case. But then the problem with that approach is that your forecasts are probably a bit crap, excuse my French. So you can't trust them as a seller and as a buyer. So it's a bit of a garbage in, garbage out. So you might actually be better off adjusting the multiple rather than your profits, and then taking the valuation effect in the backward looking valuation piece. So it's a bit hard to tell. Definitely, if I would be buying, I would be using like a 50-50 ratio on the backward looking and forward looking multiple. But then, of course, as a seller, I would use my tricks to sort of keep the balance in the backward looking end if you have a big uncertainty on the forward looking numbers. But then, of course, for example, in our 2 deals where we were sitting on the top of a highly booming industry, then of course you more than comfortable in throwing in the forward valuation, because you benefit from the sort of lift coming from the virtual world trends. So it depends, but definitely more earnout than in the past.
Great, thank you, Sami. So I think we're at about the 45-minute mark now, so we'll wrap things up there, conclude our Q&A. So just like to say a big thank you, Sami, for joining and participating today, and also for everybody that's taken time out of their day to listen. Very much appreciated. And as mentioned, we will be sharing a recording of the webinar in due course. So thanks very much, everybody.